Hello, my name's Sean. I'm from Mel's YouTube book site, YouTube channel. Okay, today we're going to be discussing the financial income and expense statement. All right, so let's get started. Just follow my mouse. What is a general ledger? A general ledger is where all financial transactions of a business records are kept that affect a related group of item entries entered throughout the months in the year. For example, inventory, stock, purchases, sales, suppliers, also known as accounts payable, customers, also known as accounts receivable, cash book, petty cash, assets, computers, and cash registers, and VAT or GST and journals. All right, the financial income and expense statement. Number one, monthly financial income statements are very important in giving one information on how and if one's business from month to month is thriving and growing. Number two, the monthly financial statement gives you a snapshot on how your business is doing. Is your income outshining your expenses? And if not, why not? What is then able to cut down on non essential expenses and improve your services towards your customers and let them know when new stock comes in? Increase the advertising of your products in ads on radio, television, newspaper, and other outlets. That's to improve it, obviously. Okay, number three. Here you will itemize all total expenses and income for the month on the debit side and all income on the credit side. You will then subtract the smaller total from the larger total, and the balance gives you an idea of whether your business has done well, is doing well, or not in the month of March, and shows you a profit or a loss. The profit is then brought down into the retained income in the second section of the trial balance on the credit side, or if it's a loss, it'll be on the debit side in the trial balance sheet. All right, financial income statement, financial income and expense account. Okay, on the sales side, sales credit $2,575. Bank interest on the credit $20. Casual wages. Now this is just a breakdown of the casual wages expense. What our petty cash casual wages is for. Casual wages $20. Constance wages less UIF and pension $150. That gives us a grand total of $170 minus the UIF and the pension $1.50 and $3 from that, and it gives us a net total casual wage and wages of $165.50. As you'll see there, we put on the debit side the 170 wages and total wages and casual wages together, $170, and on the credit side, the UIF and the pension contributions. Okay. All right. Now, the purchases on the debit side of $1,275. The gross profit is the $2,599.50. That's the part we added here up on the credit side, minus the debit side of $1,445. That gives us a gross profit of $1,154.50. And it's gone on the debit side. So this is how these two must balance, the credit and the debit. So when we add up those totals, they must balance. And that's how we got the gross profit, by taking the difference from that minus that. Okay, so we take the gross profit and we bring it down on the credit side of $1,154.50. Okay, so the expenses all on the debit side, well, some of them on the debit side. The rent excluding VAT, the cell phone excluding VAT, stationery excluding VAT, water excluding VAT, BP petrol station, there's an amount there. Staff refreshments and cleaning excluding VAT of $15.50. Just watch my mouse. These are all the totals on the debit side. Salaries of $300. Taken off of the salary, the PAYF, the UIF, the medical aid, and the pension comes to $28. That's on the credit side. To the receiver of revenue, PAYE, UIF contribution. This equals total of $14. That's on the debit side. The pension $26, the medical aid $10, the bank charges excluding VAT comes to $2.60, depreciation of $1.30 on the debit side. We add up the total of the credit side, we get $1,182.50, and the debit side's total is $536.57. Okay, Business income and running costs, less VAT in the cash book, $1,182.50 minus this amount over here, the debit side over there, $536.57 gives us a net profit of $645.93. Very important. See journal entries for petrol and Vodacom cell phone misposted in the cash book, and see journal for depreciation is also entered in the running costs. Okay, we also put it there in the running costs. Salaries and wages, UIF is 1%, and UIF contribution is 1%. That's the company contribution, I assume. In total, 2% is sent to the receiver of revenue. All right, so that's it. That's the breakdown. Financial income and expense statement. Very important to give a statement of where you are in your business. Otherwise, you just don't know what's going on. Okay. So don't be like the rest of everybody. Know what's going on. Okay, so we finished this lesson. Yeah. Please like this video when you like it. If you like it, please like it. Share it with all your friends and family and friends and work colleagues and whoever. And please subscribe to the channel. We're doing tons of these one-on-ones. We're just breaking down all the components of bookkeeping into little manageable parts, so it makes it easier for you to understand. And don't forget to go and look at our courses as well. We've also done a bookkeeping course. Go follow that. That'll teach you everything you need to know about bookkeeping. All right, so that's it. Till our next one-on-one video. This is Sean from Mels YouTube book site YouTube channel. Good day on you.